Good evening, everyone. This is Rodney with the Triton Wave update for Tuesday, August 7th, 2012. Let's begin by looking at the S&Ps. The futures on the left-hand side. Everything is T1 is completely above zero. T2 is creeping up. T3 the same thing. T4 is completely above zero, and now T5 is completely above zero. So ostensibly, everything looks good. If we draw on the right-hand chart here, if we draw some trend lines and copy a parallel, it's meeting some overhead resistance right where this channel of highs and lows and of higher highs and higher lows go all the way back to the end of June. So all of July and so far in August. So in its favor, for the upside, the market, well, actually, this is like a condensed chart of what's going on with. Let me pull up a 21-minute over here, and you can see the difference between. Okay, so on the left-hand side, you see where T1 through T5 is above zero, and these are combined. Over on the right-hand chart, it's a combined chart, and everything looks good except for the fact that this is starting to peel off a little bit. T1 is starting to peel off a little bit, and T4 and T5 on the larger grouping is starting to keel over a little bit. I wanted to take a look at the daily and show you what I discovered today. We'll make this just a long chart here. One of the things that I noticed when I was messing around with the graphs today was that if you draw a trend line from these lows back in October and you bring it up, it's touching November 28th with that big decline into Thanksgiving, and you draw it all the way up to here, and then you draw another trend line that shows up also in the 21, and you draw that there. Okay. And you take another trend line, a horizontal trend line, and you connect all the tops here, which goes back to March, the end of March, and then again May 1st. Let's drop this down a little bit. Okay, so there's your line of tops. The top of one high, two highs, three highs, four highs, five highs, six succeeding highs. All the almost all of the waves are above zero, except there's one, two, and three are a little bit below zero. But there's a huge resistance up near 400, 410. Huge resistance. This is a wall that has not been breached since since 5/15 of May 15th of 08, when the market tanked. So it would take a monumental effort to get this through for higher than 410. If it gets to 410, even though all the waves look fantastic, if you look and let me see here, line of tops. Well, the wave started keeling over on T1 over there. But even though these waves all look terrific, I would start looking for signs of the smaller time frames to roll over. So if it hits within this framework of higher highs And in the next couple of days, it hits 1407, even though the waves are pointing positive. It would take a monumental effort and something drastic coming out of the ECU, which I don't foresee happening, for risk on trades to continue past this point. So I would look for this area, 1405, 1410, as a shorting opportunity. Okay, let's take a look at Goldman Sachs. On the left-hand side, we have the daily chart. T2 is going above 0, T1 is already above, T3 is above, T4 is completely above, and T5 is moving above. All looks very good. If we continue to the upside, I think that because of what's going on in Europe, if the S&Ps top out at 1405 to 1410, this is also going to roll over because it's already starting to look like that in the 21-minute chart on the right, and this may kick up a little bit more on a blast through 1400 on the S&Ps, maybe to 14.7. I don't see much life in it after that. Taking a look at Amazon on the left-hand chart, Amazon, it doesn't look that bad, but it has to get through this all-time high of 240. And it may do that, but some of the waves are hovering right around 0, and the 21-minute on the right-hand chart is starting to have a little bit of slippage, and the fact that the Dow was up today and Amazon was down, I have no play in Amazon. I'm bringing up a chart of Baidu, but I'm getting a 102 reading for some reason. I'm looking at after hours, and it shouldn't be the after hours. The price is still bid at 128, and it's showing 128 on the top graph, but the price down the bottom is showing 102. So I don't know what's going on with that graph. So I can't really give you an opinion on it. Although it looks like it's Baidu is actually up $4 today. So the 128 is probably correct. The bottom reading is incorrect, and the left-hand chart is all a washout. That doesn't look too bad, but it's creeping up slowly, and it looks like it moved through all the congestion here. I don't know what that last reading is. Okay, so in past videos I've told you to stay away from Netflix because, at least on the downside, because it looked like it was done on the downside, but the potential for it snapping back was really high, as it's done in the past. T5 on the 21-minute has passed through 0. It happened on Friday afternoon, and it's up to 2.88 today. So this actually could make another 4 or 5 points if and only if it gets up to 63.70 or in that area, which is kind of a long shot. I would consider this a very, very good short. Looking at Apple on the 144 chart instead of the daily, it continues to impress. The T4 has now slightly moved above 0, and that's just keeps on zigzagging its way up. The only thing I don't like about Apple right now is that it's very extended. It's gone from 570 up to 621 in a matter of like 1, 2, 3, 4, 5, 6, 7 trading days, which is huge. So I would not be surprised if this so one of the sorry. one of the key things about trading the waves is that if you have a high wave here and a higher high but a lower wave, and this lower wave goes below zero, then this is likely to take a nosedive. So don't be surprised if and when the market turns around that that Apple takes a very, very hard hit down to 600, 605. Looking at MasterCard, MasterCard has been zigzagging on the daily, right on T1 over and above zero. The long wave on T1 has consistently been below zero. The shorter one is above and below, and right now, let's see, today with a 4.28 move on MasterCard to the downside. And also, I've made note in past videos that the T5 is slipping and slipping and slipping day by day toward the zero line on the short wave, which is a lead indicator for what the long wave is going to do and for what the stock is going to do. This is only 3.1. It goes down about a point a day. Don't be surprised if this goes below zero, that MasterCard takes a good 20 points off. But hopefully it'll give us some it'll give us enough warning between the daily and the 21 that you can take a position in it. Already it's not looking that good on the 21. The 21 just slipped below zero just toward the close, and it finished on the low of the day. So keep an eye on it. I think this, if you get a hiccup to the upside in the next couple of days, up like 3 or 4 points, or even to the 21 exponential moving average on the 21-minute chart. Let's see what the daily looks like. It's already gone through the 21. I actually like MasterCard to the downside right from here, because it's going to take out, it's matching these lows from a few days ago. And if it doesn't hold 418 and these waves are below zero, then it's going back to 404. If we take a look at gold, GLD rather, since T2 went above zero on the daily, it's been inching its way up, came back to support, took off again, did so on the 21 also, the wave above zero. But the wave's getting a little bit weaker, so it needs to get, if it's going to make its run, it has to do it pretty quickly, or else the 21's going to roll over and you're going to see 154 again. And then you'll see at least 155 on the 377 moving average, exponential moving average, and then that might roll over. T4 looks like it's about to roll over also. It looks like Google started to have a good day. It was up 7, 8, 9 points, and then it finished near the low. And you can see on the 21-minute cash price that the 8 EMA crossed to 21, which is temporarily not a good sign, but it also confirms a rollover on T1. And it still looks good on the long side from a daily point of view, but it's coming into a lot of resistance at 650. So this may have to take a little bit off down to the 620 area before it resumes, because this has already made a move in the past, let me see, the past 15 trading days, from 562 all the way up to almost 650, almost 100 points. So that still looks good, even if it comes down to 604. But you would want to look at short-term shorting opportunity if T1 on the 21 minute rolls over. Okay, one of the things I wanted to show you. Let's go back to the ES. One of the things that I wanted to show you was a comparison of what's going on with the tick and the vol spread. Okay, as I track across this hash mark here is 8:30 this morning. The edge of these charts on the advanced minus decline on the top and the tick chart on the bottom. So these are all, the edge of this chart is 8:30. You can see that this has been trending up all day long. There was a sell-off on the vol spread at around 239, which was right in sync with what's going on the right-hand chart at 239. So when this started selling off, the ticks went down to minus 600, and then before the day was over, even though the S&Ps dropped down, the vol spread moved back up to the new highs for the day. So there was buying into the close, and also the ticks snapped back. The problem with the ticks was, and as you can see, this line, excuse me, this vertical line that I'm drawing starts at 8:30 in the morning. This line is usually on a 1597 chart. It usually takes up an entire two-thirds to three-quarters of the screen. However, the hash marks, not hash marks, the candles on this were very limited, and they actually closed right in here. So it's a very small participation of what went on in the upside of the stock market, or else there would be more candles, because this is a measure. 1597 tick obviously is you get one candle for every 1597 trades on the S&P. So the fewer the candles, the lighter the day. So there was no real participation, even though it was trending up on the vol spread all the way up all day long, except for that little glitch in the last half hour. It was basically minus 600 to plus 600, and even though the Dow was up considerably at one point, it was up 70 or 80 points. It never really got going. It stayed in this area, plus 600, 0, minus 600. I think a couple times it spiked up to 1,000 early in the day, but the overnight session already took care of most of that. So it was all in all, it was a difficult day to play. And even if you tried to catch this little move at the end, there was a sell signal on the 1597 at 10 o'clock this morning. You would have had to wait all day. If you made it a smaller chart, you're not going to see much. Maybe the 987 tick would have helped you out, but you still would have been in all day long in order to get that one play, and hoping that you still would have had to get out. If you were just short-term day trading, you would have had to have gotten out at T1 and then back in here, because the T1 would have gone below 0 and all these would have matched up. I would say overall, difficult day to trade. One of the things that I did want to show you was the VIX. I follow the VIX closely. And even though the Dow was up 70 points at one time, I don't think the VIX ever went below, I don't think the VIX ever went negative. Let me see, 63. No, it was actually even higher than 31. It was up like 60 or 70. I saw at one time. The VIX, as you know, is a volatility index based on the premium put on the S&P 500 stocks. So that's a wide range of all the stocks that are involved to tell you in which direction the market is likely to go. So if we get rid of these here, if we match up the 21 cash price on the S&P, on the ES, and the 21 cash price on the VIX, they go in complete opposites. When this is moving up, this is moving down. This is moving up. This is moving down. You can just see from chart to chart as I move the indicator across the vertical line. So it's reasonable to assume that when the VIX moves above 0, and it's about to do that on T1, and even though the longer term T5 is still down, we have to watch this very carefully, because this looks like it could just fill this gap really quickly up to 1770. If it does that, the market's going to take a 200-point dive, and which will bring us back to somewhere in the 1370 area. Well, I hope that helps, and I will have a good evening, and I'll see you at the next update.